we're going to go ahead and get started. So hello and welcome everyone to a deep dive of the future of AI-driven investing, trends to watch in 2024. I'm thrilled to be your host this morning, Olivia McLaughlin, guiding you through the cutting-edge developments reshaping the financial landscape. This is the first of 3 webinars, if you didn't know, that we'll be hosting this month. So please be sure to register for the next 2 already. The link should be on your screen right now if you want to take a minute or so to register. But to get going on today's webinar, our format will be a one-on-one discussion with our panelist, Shailendra, where we will dive into the key themes outlined on this slide. Our goal is to ensure that you as the audience understand the key trends, how they've already been put into practice by major players, and how you might consider doing the same in your own roles effectively for the year ahead. Just a couple of logistics. Please be sure to utilize the Q&A button on the bottom right-hand side and be on the lookout for a couple of polls that will pop up along the way. Now, let me introduce our expert panelist for the exciting part, Shailendra, CEO of FinSoft AI and a fintech leader with a global footprint. Shailendra has steered technology teams across the globe, leading innovation centers for Bank of New York Mellon in India, spearheading global solution centers at SunGard, which is now FIS, and guiding the Global Delivery Center in Budapest, Hungary for Tata Consultancy Services. Shailendra's deep understanding of AI, machine learning, blockchain, and decentralized finance positions him as a thought leader, offering unique insights into the fintech-led opportunities emerging on the horizon. So without further ado, let's welcome Shailendra to share his wealth of knowledge and guide us through the exciting landscape of AI-driven investing in 2024. Welcome, Shailendra.
Hey, thank you, Olivia. And I'm sure it's going to be an exciting 1 hour. Looking forward to it.
Excellent. And just to give the audience some context, Shailendra, can you give a quick overview of what FinSoft AI does?
Yeah, so FinSoft AI, we're an AI first company, as the name says, but our mission statement is understanding social sentiment to make better and timely business decisions. Why do I say this? We process a huge volume of social media news using natural language understanding with a data quality lens to craft unique and enriched insights from social sentiment. So in a sense, what we do is mine the universe of social media news, put a data quality lens on it to give you some golden insights. Why is this unique? Sentiment is a leading indicator. That's one. So you get an edge. And more often, particularly social media has news which oftentimes is ahead of when the business announces something. So you get the edge that you're making early decisions. We also fuse public sentiment as necessary with private data to give you even more powerful insights. And then, of course, the moment is right for us because we are leveraging AI and natural language processing and understanding at this time which I would say is the WhatsApp moment for AI. So that's really what our company does.
Fantastic. Thank you, Shailendra. And would you provide a quick overview and touch base on this slide up on the screen as well, just to give the audience a heads up as well?
Oh, yeah. So I think this is extremely important. We are a technology company, and so we are not a financial advisor. So whatever we say, show on our website, on our products during this webinar series, all of it should not be construed as financial advice. Really, that's the disclaimer that anything what we say, show, tell on this platform or on our websites or our products should not be seen as financial advice.
Excellent. Thank you. Okay, so let's dive into the first topic up on the screen. And to get us started, I'd like to poll the audience first. So please all take 30 seconds or so to answer the question, which is about to be up on your screens. Which of the following technology trends do you believe will have the most significant impact on institutional investing for this year? Okay, fantastic. Hopefully everybody has had a moment to do so. So Shailendra, to kick us off, I'm curious how these results resonate with you and what have you seen to be the top technologies that are disrupting the investing space today?
No surprise with the result. I can see that AI is head and center. And the way I see this, Olivia, is this journey from computing to information to intelligence is sort of center stage now. But it's not just AI, which is, of course, head and center, but it's a combination of AI, and I use the words interchangeably: machine learning, AI, Gen AI. So that's really the centerpiece. And then, but a combination of that with alternate data, which of course includes social media and Web3. And why I say this is all of these are fundamental. So it's a powerful combination of compute, which is what the algorithms do in AI, data, which is high volume and rich data now, and of course the new Internet of Value, which is Web3. So this is what is shaping the future, and we are at the beginning of our journey, where I think we'll see a long ride, but this is just the beginning of something. Now, AI is the talk of the town, as you all know. It's all over the place, whether it's Davos, bank CEOs, global leaders, influencers, everybody is talking AI. And in some sense, ChatGPT, its arrival permeated, AI into public consciousness. Everybody, including a lot of the boardroom CEOs, can play around with AI, unlike blockchain in some sense. So that's really what's happened with AI. And what's more important is this combination, which I mentioned, of these technologies have an interplay. So, for example, LLMs or Gen AI could not have been possible without it being trained on a large volume of internet data, whether it is Wikipedia or anything that's on the public web, anywhere which has been trained on. But then this is a bootstrapping effect, because if you look, LLMs can also create a lot of synthetic data, and together this interplay is a powerful force. And you can see that permeating into social media too. A lot of the posts in social media now are AI generated or AI assisted. So you'll see everything is getting generated. Now, coming to alternate data, and what is alternate data? Of course, it includes social media, which is big in alternate data, but it includes many other things like economic indicators, satellite imagery, maybe credit card transactions. So all of these are alternate data. And they really give you the edge, because the traditional way of lens of trading or investing looked at fundamentals and technicals. And what's been found now is that if you combine this with alternate data that is matured over the last 8-10 years, that really gives the edge to your investing or trading decisions. So that's really alternate data in some sense. And the other trend that I'm seeing now, which is all pervasive in some sense, is that the frequency of macro and micro events that cause perturbations in the market, whether it is if I say the macro events like the pandemic, it caused the perturbation in the market, then the wars, the micro events like the meme stocks saga. So all of them create many investing or trading opportunities. And this is happening at a frequency that is fast. And you don't want to miss these opportunities. So I'm seeing also the need for a financial insights marketplace. So that means that people who are mining these opportunities actually collaborate using sort of a consortium that could use a private blockchain and create a market insights marketplace. So, it kind of gives you insights, financial insights marketplace. So that's really where the future is. So if you see, brace yourself for 2024. We're at the beginning of an exciting journey, and this is going to be a high velocity ride. So that's really what I wanted to paraphrase as what this potent force is, Olivia.
Great, thank you, Shailendra. I'm sure much of that resonates with our audience, and I'm curious if you could take us one step further and perhaps walk us through an example of how you're seeing people currently use one or more of the technologies you covered and really prioritizing them in their day-to-days.
Super. I'll first paraphrase two items that are important and then give you three extremely compelling examples. So what I wanted to say is that AI in particular will play across the trade life cycle. So whether it is stock selection, portfolio rebalancing, order management, risk, fraud, the entire gamut of the investing or trading life cycle, AI can make a difference. But where is it that it will make the most difference? So if you look, large language models, and that's something we should understand because this is meant for the financial community. Large language models excel at handling text and maybe images now, but do not excel at numbers and number crunching. So I think the biggest initial opportunity will be to read lots and lots of volumes of data, and which is on social media or on other platforms, to give you, golden insights, show you interesting patterns, correlations, and also do risk mitigation in some sense. So the largest two opportunities will be using lots of natural language understanding to give you upside in terms of trading strategies, but also manage your risk. So that's where I see. Now I'll give you some powerful examples. And let's start, before I get to the institutions, I want to start with something that you and me can do. And this is kind of interesting because all of us in some sense do trade, want to make money. And I tried using Bard, and I said Bard because Bard has the latest data. So I was interested and I asked it three questions. I was interested because I had some spare money and wanted to trade. And I said, I had a stock X in mind. So I said, okay, hey Bard, can you give me the intrinsic value of this stock? So that's the book value in some sense of this stock. So it normally will require some number crunching in terms of doing discounted cash flows, etc. But of course, LLMs don't do that. They go to the internet and give you some really nuanced answers as to what the intrinsic value is. After that, I asked it a second question. Hey, is this intrinsic value below or above the value at which it's being traded? So that's pretty interesting. And it said it's actually below, so it's a good buy. And then I went a step further and I said, can I find 3 stocks in the same sector that are trading below their intrinsic values? And again, it went through to the internet and found something and gave me some pretty balanced answers. Now, so that's the power right on your phone that you can exploit. But caution here. Remember, like I said, that we are not financial advisors. LLMs have also got now guardrails. So you just can't ask the questions in the same way that I asked. And it's going to get tougher and tougher unless these LLMs or ChatGPT says that I'm a financial advisor. So the game is all shifting to the institutions. And I'll give you 2 examples from big institutional players across the life cycle of the trade or investment. And they're pretty interesting examples. If you take JP Morgan Chase and Morgan Stanley, both are playing in the space of leveraging AI to give you sort of financial advice or guidance on which stocks to buy, okay? And their approaches are sort of different. JP Morgan Chase is, in fact, this is in the public domain. They've announced it. There's nothing there done yet in the market, but they're working on this. So they are coming up with their own LLM called Index GPT, which of course is trademarked. Maybe they're doing some patents on it, etc. And what they want to do is to disintermediate the financial advisor. So directly you and me can sort of deal with an AI assistant, or it's like a robo advisor. It's not, but that's interesting what they're doing. They're going to develop their own model. At the same time, Morgan Stanley is actually taking a slightly different approach. What they're doing is they're using OpenAI, and what they are also doing is empowering the financial advisor. So in a sense, both are developing something which can give you financial advice, but one disintermediates the financial advisor while the second one actually empowers it. And I guess these are different business models, and we don't know what the future might hold. So that's one good example, which is on the upside, or where people can use this to get better alpha or better advice. The second is actually in fraud detection, and this is more on the risk side of thing, or on the compliance side of thing, to be more specific. If you see Capital One and again JP Morgan, so both of them have actually implemented better fraud detection. So what they claim now, of course, and this is published studies, is they have now a much lower false positives. So it's the accuracy of detecting fraud has improved significantly. Their cost has been reduced substantially. And most importantly, their customer experience has also improved. And the reason this has happened is that the false positives are reduced. If you are flagged as a false when you are actually not done anything wrong in fraud, it can really upset customers. So these are again good case studies at two ends of the investing or trading life cycle in the institutional space. So hopefully this gives some early insights, but you'll see a lot more. The next question that we wanted to answer is what's happening in the social media world? So that's really something that I wanted to dwell upon. So if I take social media, it's pretty interesting. Social media is old, mature technology in some sense. It's been around for a while, but there is renewed interest because there are 5 or 6 trends that I'd like to highlight, actually 6 of them. First is data monetization. I think all the LLMs have been trained extensively using social media. And so now I think there is an opportunity for the social media platforms to monetize the data beyond doing advertisements as the core revenue stream. So that's what is happening. And you can see that Elon Musk actually took on and bought over Twitter, which was a very interesting decision. But because of that, there's been some renewed interest. You know that Facebook sort of, or Meta launched Threads, there's Spoutable, Post, Hive. All these are new platforms that have arrived in the last year and a half. And also with besides data monetization, the other theme that is important is that there is something around censorship resistance too. So a lot of the social media platforms are going through that. So decentralized platforms, which nobody can in some sense control, like Mastodon and Blue Sky, which are federated, are also gaining a lot of popularity. So you can see renewed interest in data monetization. I also said a lot of the social media posts now are getting generated using AI. I mean, that's what Gen AI is. It generates a lot of new stuff, video, audio, combination. It's multimodal in some sense. Some interesting facts. What we're seeing is that text-only posts are proving to be a super hit. Probably because I think people are getting back to simplicity in a world that's saturated with a lot of video content. So that's kind of a surprising, third insight that I want to share. The other ones are pretty much obvious. Social platforms are evolving to be, and they want to be the hottest new search engines. I mean, although search engines in general are being challenged now, but this is a theme that's running in some of these platforms. And of course, there is some convergence because on an average, people juggle between 6 or 7 social media platforms. So in some sense, there's some convergence, like what's happening in Meta with Threads, Instagram, WhatsApp, all of them sort of converge that if you post on one, it gets posted elsewhere. So that's a new theme. And of course, like I said, the decentralized platforms, like Mastodon, Blue Sky, they're gaining popularity. And they are also being called the Fediverse or the Federated Universe. So that's really the social media trends. Let me get to the next topic, which is really around we talked social media, but we are also talking about what are the key demographic changes that you're seeing in the within the traders and investors. So let me go through the three demographic trends. Pretty interesting when I see this. Three demographic trends: the rise of the Gen Z and the millennial investors is number one. And when I say Gen Z are sort of the youngest population born 1996 and later. So these are young people, and you're seeing that they trade the most and they trade the most often. And they trade with a lot of insights. They don't. So what I find is, for example, Bankrate did a survey that how many, if you go across the generations, which is Gen Z, the millennials, the Gen X's, the baby boomers, and say how many of them really looked at opportunities to invest or trade when there were changes to the interest rates. And you found that the Gen Zs were 90%, all of them said, I will, they'd done it. Millennials were later. And so the younger folks are trading much more and also trading with a lot many more insights. So, they're trading smartly. So that's really what is happening. The flip side also is that if you ask them a futuristic questions, will you trade if there are such opportunities in the future? Let's say the bank rate changes or there's a new event that happens which is going to change the financial markets. Majority of them said they trade very actively. And so that's really where the rise of the Gen Zs and the millennials is the first trend. The second trend is the rise of retail trading. And this is fueled, of course, by smart trading platforms like, let's say, Robinhood or others like, for example, Zerodha in India, discount brokerage models, which means that people are incentivized to trade more and more often. So that's really where a discount brokerage plays a role. I think the role of COVID and work from home cannot be discounted because people had a lot of time at their hand. They didn't have to commute. And many first-time traders walked in and investors walked into the capital markets in some sense. So the rise of retail trading is the second trend. And the third, what I'd say, is the gradual democratization of trading. So the rise of retail is great. Of course, the institutions still are the most powerful, but the retail traders are getting smart. They collaborate and share tips. They're highly expressive. I'll talk to you about that too. And this is why the meme stock saga, when a bunch of folks combined together and really got down the institutions in some sense, and that was exemplified in the movie called Dumb Money. So in some sense, there is a gradual democratization of the retail trading of the trading space, with retail sort of surging a little bit. Institutions still sort of hold the lead, but they now have to keep a rear view mirror on what's happening in the retail space. So the retail sentiment, in some sense, becomes even more important. So that's really the three demographic trends that are sort of shaking investors and their behaviors.
Thanks, Shailendra, and apologies for the internet snag here, but appreciate you rolling with it nonetheless. I want to take that question one step further and ask you how you've really seen kind of the evolution of that demographic play a role in the way that trades are actually happening.
Super. So we talked about demographic trends, and then they're coupled with behavioral changes. So again, like I said, three demographic trends, and I'll point out the three biggest behavioral changes that are at the back of this change. One is the fear of missing out. And this is really what I said in the beginning, that the Gen Zs in particular trade more and more often, and they trade in a very informed way. And the reason is that they want to make most of the opportunities. So 90% of Gen Z, like I said, would trade on when there is, for example, an investment opportunity like an interest rate change. So fear of missing out, or the FOMO, is something which is a big trend here, or a behavioral change. The new generation of Gen Zs and the millennials don't want to miss out on opportunities, but they also make sure that they have all the knowledge to make the most of the opportunities that they trade in. So that's number one. The second sort of behavioral trend is all of them want to get rich soon. And this is happening because of the instant gratification fueled by the internet and the digital economy. So this is happening everywhere, but there is a get rich soon phenomenon. People want to sort of make money faster. And that's why they trade more. And the fear of missing out in some sense is part of the same cycle. And the third trend is they're extremely expressive on social media. What that means is that they share information about their trades. If you go to forums like Reddit, Wall Street Bets in particular, you'll see sort of threads which say people expressing how they had trading gains or losses, or things like you only live once, and how they made the most of their trading opportunities. So if you see, there's a lot more sharing going on. And what this means is that investing and trading is going a little more social. And that's why I call it social trading or social investing. And with this, there's also the rise of the influencers. So, and that is causing a slightly new phenomenon. It's been around for a while, that a lot of people would want to mimic trades made by a star trader. And these people, given the cloud, the internet, and the digital means, what they do is through certain, brokerage platforms, a lot of these star traders open their trading books, so people can mimic what they're doing. So these are new sort of trends, some little older, some new, that are behavioral trends that are shaping the future.
Thank you, Shailendra. And with the evolution of this trading landscape, what do you think that this means for skills that will now be attractive for traders and investors to have in the very near future?
Excellent question. The way I put it is it's a bucket of 4 skills. 2 are traditional, technical and functional skills. Technical and functional skills, which is functional skills, is all about knowledge of the markets. I mean, that still remains very important. Technical skills, when I say, is all about technology in some sense. So this has always been there. But the new skills that are evolving and have evolved in some sense is that every trader or investor now, if he or she wants the edge, needs to be data literate and also AI literate. So this is something that is evolving in a big way. Because the opportunities are coming fast and they're coming in patterns that you need a lot of data literacy and AI to mine those patterns. So these are the 4 big skills. But if I really go down to some specifics, I think more and more we are seeing that people trade using signals. That's quite popular. Social media savvy. I mean, they're really looking at what's going on. Prompt engineering is a big deal. They all use AI in some sense. And given what's happening in the LLM space, a lot of programming is also getting democratized. So they are good data analysts, they are decent prompt engineers, and also can do some quick coding. So that's kind of the skill. But besides that, they also trade nowadays 24/7. So it's not just the domestic markets, but access to platforms and the reach, so that folks can trade across the world, across different time zones. So that's the trend that I'm seeing more and more, or the skills.
Fantastic. Thank you very much, Shailendra. I want to now hop into this topic, the shifting functional and regulatory landscape. I think a lot of companies are considering some of the new technologies that you've covered, but are a little bit nervous. So curious what you think will be important for companies to consider in the regulatory space as they start incorporating some of these new technologies.
That's a super question, Olivia. The way I see it is that if you look at regulation, it sort of holds you or pulls you down. And if you take innovation, it's an uplifting force, but it's got some risk in some sense. So both of them, push in opposite directions, and you need to find the right balance. And that's where regulators come into play. Now, AI, in some sense, some of these technologies now are not confined to a geography. Because of technology, like I said, there are no real boundaries. So things like AI, social media, crypto, they're already getting regulated not only in their different countries, but even some talk of global standards. Now, of course, AI is still evolving, but that's the one which is getting a lot of attention. For example, European Union recently sort of announced their EU regulations. They're not yet in force, but a blueprint is out, and it has some very interesting things. Almost all the countries are doing all of this. So whether it is AI, crypto, or social media, they're all being regulated at a country level or even across countries. There are some other smaller trends. For example, I feel when you say regulations, a huge opportunity is in the space of ESG or impact investing. ESG stands, of course, for environment, social, and governance. And I think regulating this is a huge opportunity. Trillions of dollars are being pushed by funds into ESG opportunities, but there are really no standards, transparency, or even reporting standards that companies have to follow. So I think there is a dire need for ESG regulations. MiFID II is slightly old, but what that means is the unbundling of research costs which are embedded into a trading advice or an investing advice. Typically, it was all rolled into one. And so there could be some bias in saying, hey, trade this, I got this research report, but then, that bias could be there. Now you have to actually say, this is the cost of research and this is the opportunity or advice that I'm giving you. So that's a interesting change that's happening more so in the European markets. And of course, there are legal issues with AI models. What's happening with the New York Times and OpenAI. There are also other trends that are coming in that maybe LLMs would need to be certified because, so there are many things that are happening in the space of regulation, and the right balance is actually pretty important because the opportunity is bigger, but then you need regulation to make sure that, everything is controlled and we don't see some adverse impacts.
Thank you. And I know that you'll speak a little bit more about that balance in a little bit, but for now, curious what impact you think this new regulatory landscape will have on the future.
Yeah, so regulators are typically smart. They don't regulate something until the opportunity blossoms. So that's important. And so finding the right timing for the regulation is very important. But how does this impact in terms of institutions and startups, etc.? I have a perspective on this. So typically, institutions are late to the party, financial institutions. So startups start early, and then as this clamps down the regulation, I think if you are smart, starting early, you might get a head start over the bigger companies. There's also something else that is being talked about. If you hear what Sam Altman has been saying is that, because he's a proponent that we must do some regulation, but he's also very clear, don't regulate the smaller companies, in the space. It's the big tech and the big financial players that need to be regulated. So that's a perspective. It's really an opportunity for smart, nifty companies that can be very agile and AI first to take the lead. So that's my perspective, Olivia.
Fantastic. Thank you, Shailendra. And Like you said, important to consider these regulations, but I do want to harp a little bit more on new business opportunities for investors and traders and how you envision these tools might help them unlock new business opportunities moving forward.
Super. So new business opportunities, as I see it, I would say four. One I mentioned in the regulation space is the ESG opportunity. ESG is all about impact investing and investing for creating a better future. That's sort of the tagline for it. And it's touted that 1/3 of all the investments in the world would go into ESG. And if that happens, it's a $50 trillion opportunity. But there are clear lack of standards, transparency, and reporting requirements for companies. So in some sense, AI can mine the public perception and combine it with also the, what rating agencies, etc., are saying, S&P, etc., that has a ESG index, and give a much balanced and nuanced view through a sentiment score, for example. What's the sentiment of a company with respect to ESG or only E or S and G? So that's a big opportunity in itself. You can see the size of it. The second is, again, very large. That is the use of generative AI in investing and trading. And projections are that the CAGR for this is 30% through AI-driven strategies that will become mainstream. Third is the category of natural language understanding and sentiment-driven funds and ETFs. And the reason I say this, again, is that LLMs in particular are extremely good at handling text. They excel, but are not good at number crunching. And the current opportunity is that there's a huge volume of data on the internet, so that's public, the dark web, and also private data. And if we can use AI effectively, these funds can really sort of get the edge. So this has been around. We have some funds, but they could see their day now. So that's the third opportunity. And the last opportunity is more, I would say, more like an investor. So if you look at AI companies, when I say the AI companies, the big AI companies, and all of the wealth that is being created in the world right now this year is all in the big AI companies. And Jim Cramer says that these large big tech AI companies have more headroom to run. And that's because they are mainstreaming AI. So there is a lot of opportunity for investors also to sort of, invest in these AI companies that are mainstreaming AI. So those are the four real opportunities that I see, Olivia.
Fantastic. And I know that, as they're considering some of your points, they'll be excited to choose a couple of new, tools to support them with that growth. So as companies are choosing different tools to get on board with AI, what do you think will be some important considerations for them to have?
Super. So I think there are, again, two here that I would highlight. One, like I've always been saying, I think we're at the beginning of a cycle which is right now large language models. It'll get multimodal. You'll develop number crunching abilities, etc. You can also look at things that are happening in fund search and other math-driven tools that are being pushed by AI. But right now, the time is for natural language understanding and processing and sentiment analysis. So that's one big opportunity where people can mine what's happening, micro, macro events, and not miss on trading and investing opportunities. The other big, if you take a product or a tool or a solution, the other big opportunity is more that if you look at the persona of an investor or a trader, it's very different. Some will go for alpha, that is, they want to maximize their gains. Some will say, I want to maximize gains, but also keep a threshold on my risk, that's beta. Some are value investors, other are momentum investors, some are also impact investors. So in a sense, they are more ESG conscious, so they will not invest in a class of stocks like tobacco or marijuana, etc. So you can see that the gamut of investing types and styles, and any solution that you build should not be a one glove fits all solution. It should take the persona of the trader or the investor. That's most important, taking the persona. And what that means is every trading or investing advice is individualized. In a sense, the product fits a persona of one. So that's really what we have to do. It sounds very difficult, but can be made possible by AI, because now there's so much knowledge that AI can have around the individual that is investing or trading based on his private or public data. So that's how the new sort of solutions or tools. These are the two areas they should really focus on.
Fantastic. Thank you, Shailendra. And for our last topic before we wrap up, I do want to ask you what you think the challenges that AI creates for business developers and users. But ahead of your response, I do want to first poll the audience on this one. So if you could all take 30 seconds or so to answer the question on your screen, that would be great. What has been your company's biggest challenge with integrating new AI tools into its investment strategies? Great, thank you, everyone. So Shailendra, back to you. How do these results resonate, and are you seeing the same challenges in your world?
Okay, they resonate well. The way I see it is that the challenges are actually oftentimes talked about more than the opportunities, but there are some serious challenges, and we'll talk about them. And challenges could be from a business perspective, from a development perspective, or from users or usability perspective. So I think we'll come into that. But the lens I use is to be a pessimist in the short term, scrutinize everything because everything is evolving, but be an optimist in the long term. So that's an advice that I always use. But in this case, the opportunity is changing so fast that you can't be a fence sitter. You have to be inside the boat. And once the boat is moving, it will move at a high velocity. So that's really the lens that I use. Be a pessimist in the short term, scrutinize everything, but be an optimist in the long term, but be inside the boat. Now, coming to some of the interesting business challenges that I could highlight through examples. The biggest one is, of course, people fear the loss of human control and ethical concerns. And I'll give you an example. Apollo Research presented at the UK AI Summit in November of 2023. It's very interesting. They did this in a sandboxed environment. So they had a trading bot on OpenAI, GPT-4, and it was given the task of maximizing alpha. And this was in a sandbox environment. And then it was put under pressure. So every few days, the expectation on the ROI or the return was increased. So you're putting more pressure on the bot. And as they did that, they also started feeding it insider information. And beyond the threshold, once the alpha expectations were beyond the threshold, actually, the bot did take the insider information and made outsized gains. But when quizzed, it actually hid the fact that it had the insider information. And all this is because bots are developed like humans. So that's a bit scary, but it is a fact that there are some ethical and human control concerns. Second one is normal. It is to separate the hype from the reality. I mean, if you go to Gartner, are we in the hype cycle or the trough of disillusionment? But a recent example, last year, and this was when Google released a video around Gemini's capabilities. This was last year, and the rubber duck sort of video, which showed multimodal capabilities across video, text, and speech. and it garnered a huge number of views and created significant excitement in the community. And when quizzed a little further, Google soon clarified that this was indeed an inspirational video and not really reality. But coming from Google, I'm sure this will be reality soon. But the fact was that it was still a little bit of hype ahead of its time. So you have to separate the hype from the reality. And most important, I mean, third, I would say is that all the focus right now is on foundational models. Those are the LLMs. The fun will come when you have all the applications built on the foundation. Now, the challenge really is that the foundation is constantly changing. So how do you build an application on top of a constantly changing foundation? So that's quite a challenge. But given the speed of change, while lots of POCs have not scaled, it's important that organizations find a way that they don't wait for the foundation to be stable, but in some sense have an agile environment that keeps them lockstep and so that they can win in the race. So that's very important. And there are concerns around data privacy, latency, costs. So that's of course a big thing in the market. But I think from a financial perspective, I think the biggest downside right now is that LLMs or Gen AI or even transformers do not understand numbers and do not do number crunching. They're in fact, in some sense, stochastic parrots. They only understand probabilities. But there is still a huge opportunity because there's a whole lot of information in languages. So that's around the markets. It's either news, social media, private data, the dark web, all of that can be mined using natural language understanding and sentiment analysis or opinion mining to give you golden insight. So if you see, there are challenges. All of these challenges would be overcome soon. They would get regulated. The right ecosystem of players will find the right balance. Don't wait for that. You have to move on and make the difference. So that's really where it is happening. In fact, I'll end with a quote that the first minister for AI interestingly in the Emirates made. And he said the English dictionary, if you ask it to, what's the difference between complete and finished? So take it as a joke, but it's really important. If you use AI and you are ahead of the game, then you are complete. If you sort of don't use AI, you could be finished. And if you ignore AI completely, then you are completely finished. So that's really what could happen. And I'll end on this note, Olivia.
Fantastic. Thank you, Shailendra. And I think this quote will resonate very well. So appreciate you reviewing that. I would like to ask you about your key couple takeaways from the webinar today, so everyone can leave with your most important takeaways. While you do that, I do want to encourage the audience to submit questions to the Q&A if you haven't already, since we'll do that immediately after. So Shailendra, if you could cover your biggest takeaways that you want the audience to leave with first, that would be fantastic.
Sure, and I think they're well summarized on the screen, but if you look, what I said is that AI and data, that is social media, alternate data, and the Web3 will work together as a force multiplier. So when technologies come together, it creates an even bigger disruptive wave. The impact that they will create would be all pervasive across the investing and trade life cycle, while opportunities could be more on the investing strategies and risk management. There is a gradual democratization within the retail trading community. You can see the shift in demographics also happening. And what that means is that institutions will now need to keep a rear view mirror on the public opinion or the sentiment of the retail crowd that is growing. The biggest and most immediate opportunity is leveraging natural language understanding and sentiment analysis, since number crunching is still a little away. Products that will be developed would be highly individualized. So we'll meet a customer of one persona. So in some sense, every individual will get a product that fits his or her own trading or investing style. And then you must balance what's happening between innovation and regulation. Like I said, one force holds you back and the other one uplifts you. But there are risks with upliftment. So finding the right balance, but not being a fence sitter and being on the boat and on the journey is most important.
Fantastic. Thank you, Shailendra. And thank you so much for being here today and for diving through many of these points. I know that the audience will be very appreciative as well. And before we hop into the last few minutes where we'll do a Q&A, I do want to remind the audience to register for webinar number 2 if you haven't already. I'm going to put the link up on the screen one more time. We encourage you to all sign up. Shailendra will cover new opportunities in higher alpha using social sentiment insights in this webinar, and we'll really dive through various use cases and case studies in depth, highlighting the impact of social sentiment insights. So it should be a very fruitful conversation. This will happen next Tuesday, February 27th at 11 a.m. And we also will have our last webinar of the series the following week, Tuesday, March 5th, same time, where Shailendra will highlight Finsoft AI's latest product, really, really exciting. And this product will make an impact on many of the themes that we discussed today. So we'd love to see all of you there. Also encourage you to write us any follow-up questions you have. Shailendra is committed to answering all of them, and to visit our website at www.finsoftai.com. But for now, I'd love to hop into Q&A for the last few minutes here. We do have a couple questions that have come in already. Feel free to keep entering them in as they come. But I'd love to hop into the first question here. I think you touched on this a little bit already, Shailendra. The question is, what are the challenges with large language models understanding numeric data, and how can we overcome the same?
That's interesting. If you think that one thing computers do well is maths, but then LLMs are more human than calculators. So calculators can do math very well, but not Gen AI, because Gen AI is probabilistic, whereas maths is finite. So when you have an answer, it's always correct. But like I said, Gen AI looks at probabilistic patterns. It in a sense finds the next word or the next sentence using laws of probability. And so it's correct oftentimes, but not always correct. They are, like I said, stochastic parrots. So that's a challenge. To overcome this, I think best would be to use, as of now, Gen AI for all your language related stuff, and then use traditional computing. So you could write, for example, if you use things like LangChain, you could call the math libraries, which is actually Python code, or you could integrate like what's happening with Wolfram Alpha, or you could convert your sort of questions into SQL queries. So these are interesting ways to overcome this. But at the same time, things are happening in this space. Watch out for for example, what DeepMind is doing with fun search. I lack of time, but I can speak more on this. But it will change beyond the point. But I think, like I said, calculators and traditional computing that uses ALUs or arithmetic and logical units are best for computing. Gen AI is looking at patterns, probabilistic, and so not the best to give you definitive mathematical answers.
Thank you, Shailendra. Another question that came through is, do we have AI tools which will help layman investors to understand the financial world, like balance sheet?
Mm-hmm. Not yet. It's kind of similar because balance sheets are, again, numerical in a way. So what people do is they look at the K10 reports. I mean, one way that AI is, it's an old way. So if you look at the Edgar reports, which are the filings, quarterly filings or the annual filings in the US, there are things like the management summary, the MD&A sections, which are textual, and you could mine that to give you sort of a summary of the forward-looking guidance that the company is doing. But it can't really look at LLMs in particular can't sort of read balance sheets. You could augment your LLM with sort of math libraries, etc., to do that.
Thank you, Shailendra. Another question that came through is, would ESG become the top contributor to investing and trading?
The theme's very good, although the world is politically divided. And the reason is that there are really no clear standards. I think the theme's well-meaning, that invest in creating a better world and invest in companies that are building a future for not only our generation, but for the generations to come. But until you have until you have real regulation, transparency, reporting guidelines, because the companies only report what is necessary. So for example, Tesla was thrown out of the S&P 500 Global Index for ESG, whereas ExxonMobil, which does a lot, by the way, in terms of carbon credits, etc., but in some sense, the fundamental DNA for somebody like ExxonMobil is to take away things from the earth. So it is really not creating the best future for everybody. So until there is this, lack of transparency or regulation, or also reporting standards that are more global in nature, but specific to verticals or sectors, and also, it might also change by country, because every country's value system in terms of what is ESG would be different. So this is definitely, ESG is a huge opportunity, but until we have standards, the only way you can do something is through look at not just what paid research reports are saying, but look at the public perception by mining the sentiment and for specific topics that impact ESG for that company.
Thank you, Shailendra. And we have one more minute and one more question, so I think I'll slide it in here if you don't mind. The last question is the approach of investment at institutional level also tied to which generation the investors are at, or will it take time since Gen Z or Gen AI are not in these institutions at decision-making levels?
It's interesting because institutions are also going through a change. And I think the biggest change that the institutions will go in is that this is the question of the mix between a human and a machine. And I think the standard answers are that it's a co-pilot, it's a RoboCop, so it's all the good. But getting the chemistry right in terms of how a machine and a human can interact and get the real value out is a difficult task. If you look, it can take a long time, can take lots of cost, it's time consuming, and we all say it, but do humans need to become more like machines, or do machines need to become more like humans? So I'm going back to your Gen Z point. I mean, if you look, Gen Zs are the ones who work most with machines. If you take my kids, I mean, they love to talk on social media, not on the phone. They're happy not meeting very often, but chatting on social applications or on video, etc. So until you have these Gen Zs coming in, the real prime time for AI, good or bad, might not happen.
Wonderful. Thank you so much, Shailendra. And thanks everyone for hanging on here for the last couple minutes of Q&A. Again, we really appreciate you all joining in today and look forward to seeing you next Tuesday. Real quick before you head out, if we could get your feedback on today's webinar, that would be fantastic. And we will see you all next Tuesday. Thanks so much, everybody. Have a great rest of your day. And thank you, Shailendra.
Thank you, and hope to see you next week. Bye-bye.